Everyone, this is Anne-Marie. Today is Tuesday, September the 17th, and this is the SPY report looking at the day. You know, if we were just taking a look at the numbers, we would say, wow, it was an up day, but we do know that what we did was gap very high and then fade. And so a couple of things that we can say is that in general we're just behaving not out of the ordinary at all. When we have gigantic gaps up like that or gaps down, we have a tendency to fill in those spaces, and we did start that just out of curiosity. It just occurred to me. Let's see how much of that gap we actually did fill. Looks like we took about 38.2, maybe a little bit more than that. I would say that we do fill this gap. If we don't, this area at least, the 61.8 area should be the one that we come into at the very least. If not, we fill the gap. We've already got a little bit of downside momentum showing this morning. Nothing huge at this juncture, though that could change being as early as it is. But that's what we're looking for. I expect a fade. Let's watch for the bounce. Now you can look at this region, this 169 area, and expect a bounce perhaps into a lower high. Let's see how it does right around this 170.60 area. If it begins to fade there, we know we've got a little bit more downside on the horizon. This is actually a double gap event. There's absolutely no auctioning right here over the last couple of times it's moved through this region. So I suspect we do end up coming in to that area at some juncture. That seems extremely likely to me, and we do have the 1618 down here. It may just press forward a little bit before popping. That is a little bit noisy, I realize that. However, it's kind of what we have to live with right now based on the current formations. Upside momentum showing really pretty solid action, but the fast SMI rolling over just a bit more. There is some technical divergence and overall dampening momentum. Let's take a look at the IWM. Same sort of thing. Okay, so what do we take a look at? This looks like it's in a bounce formation. It is holding pretty solid. Yes, there's negative momentum, negative divergence, and mildly negative momentum. So what we're going to be looking for is, hey, can we hold this region? If we cannot, then we're going to go right back in to this lower region that is close to the 50 simple moving average. If we hold the level above 105.23, we're going to have upside momentum, and that upside momentum is going to give us the opportunity to get higher highs. So far today, if this prior trading day, if we had come into this region, we would have been able to take a number of profit targets off. This chart's been doing very, very well. For those of us in the SPY membership taking advantage of the free one, we've been long and have done remarkably well. Yesterday, the Qs coming into a very pretty target, IWM also. SPY a little bit tough if we had not taken the aggressive entry, but nevertheless, what we're looking at today is, can we hold the 104.80 level? If we cannot, we're going to have downside momentum to the tune of potentially another 50-60 cents. It's in high congestion, so we could also stop just 30 cents below. It's a watch state. Ideally, we want it to pop from here. That'll make a nice clean trade. If it comes down here, it'll be very messy and in a chop zone. probably going to fall into this chop zone with the Fed day, but you know, we got to trade what we have, or we have the choices to trade what we have. And a lot of time that's going to be sit on your hands on a Fed day, and potentially that's what's coming. Now notice this. There are certainly, this is an afternoon, this is actually an early morning candlestick. Not really sure why we get pre-market activity sometimes and other times we do not coming in here. It's all about the feed, but in essence what we have is this stretch up into this level and then the fade through the area. So there is a bit of the gap fill left for us right here, and that also could happen before the bounce. I would be very careful if we slip into this region. Don't stage a short here. Let it confirm and lose the level. If it comes into this region and begins to bounce, you can take the potential counter trend into a lower high, or you just take the collapse, or wait for the lower high and then take the short. Very, very messy. Here's the thing I'm describing, folks. When we trade, it's not only about the level, it's about the formation. It's how we've approached that price. And that's a nuance that a lot of people who are junior as traders, and frankly, a lot of intermediate traders do not have a firm grasp on. It is about the form and not only the price. Where it's coming into matters because of how it got there. All right, so you got to keep that in mind, and certainly if that is something that you have trouble with, could mean that you just need a little bit more study action there. And of course, that's something that you have to decide where you're going to get that from. All right, so Qs, quite a bit more sideways, right? Same sort of function, filled in the gap and then faded. So for us, we were totally out of our long event yesterday at just past the open. Now we're here sitting at this primary support event I labeled yesterday. We broke it but came above it. Here's something else that you need to figure out. This is not a pretty time in the market. Yes, the charts are moving up, but you can't have trailing stops that are too tight, and you can't bring your support levels right into a space that everybody else is seeing, because they're going to come after you if you don't say, hey, listen, all right, that's my broken support. Is that a confirmed break, or is it recovering? And so many times all we're seeing is that it comes in, hits the level, and pops right out. So although we have this very nice clean upside draft in so many charts, the wicks are knocking people out that are keeping trailing stops. And those of us who are doing that absolutely know that that is a fact, right? The key is, if you come into the level, are you able to pay attention to it well enough to go, wait, that did not break down. There's still a chance that that holds. Now, for us, we were out way up here. I did not advise anybody to take the counter trend trade, though on the intraday trading event that certainly did open up, and you could have ridden this down all the way into the monthly pivot. That's kind of a big deal, right? Yeah, that is what that is, I believe. Maybe that is the weekly. Not sure. In any case, you could have ridden it down into the pivot. What are we looking at here? Another sideways event. Here was the last sideways event that we had. That's where we took the long at the breakout over 77.30. And now we went into 78.60. And now rolling over. Do we hold it? I have no idea. That's really true. I do not know what the charts are going to do. I will say this. If we lose 77.58, it is very likely that we come down into this region, which is an unfilled gap, and we start working on it. Right? That seems to be very, very legitimate. And if that's the case, well, we know what's going on there. There is the notion of tapering. You know, we've got that going on. All I have to say is the following. Pay attention to the level. If it breaks the level, you know it's going to go down into the next region of support the way that it's formed right now. And watch for the breach and the recapture of the 78.12-ish area, 78.15. If it does that, you're going to have yourselves another test to the upside. All right? Interesting trading days. Got to pay attention. There's some good spaces to trade, some very nice charts to trade, and some difficulty as well. Notice the difference for these oscillators here. These both negative, this one positive, mixed signals under there. Not sure which one of these are leading. Normally, the IWM is leading the SPY. The Qs have been leading the SPY also. Overall, it's really has been the one that's held up very, very well. Now we're sitting at the space where I'm not really sure what's going on. So, trade carefully. Watch your levels, and good luck.